Syria remains the focus in many commodities markets, specifically crude, and here to talk about it is Alan Harry. Alan, it's good to have you back. Let's jump right into it. With Syria, are we still seeing oil with a lot of upside potential, or are we going to see a pullback?
Well, the way I'm looking at it right now is, with the problems over in Syria, it could turn into a mess. And I don't really see how we exit out of it cleanly, and I also don't see how we get a clean win out of it. All that should put in quite a bit of war premium into crude oil. Right now, it looks to me like there's only a $5 premium, war premium in crude oil, and it feels like it should be, based on past history, $10 to $20.
So then what are you looking at?
Well, I find it interesting that it is such a low war premium based on past history. So the one thing that I'm starting to think about is, would there be a need and would there be a willingness to release our oil and gasoline reserves if we did have a war with Syria and crude oil did take that rally up? Would we release the reserves, which would put a cap on the oil market?
So do you think that's why we're right now seeing crude actually with a slight pullback? We're seeing about $1 down.
Well, two reasons. First is, I think it's holding the war premium in check on the idea that we could release those reserves, and we, in my feeling, will release those reserves if we do have a spike in crude oil. The other reason why I feel, though, also is crude oil right now seems to want to trade around the 102 level or the 100 level. So right now, where it is, and we don't have any action in Syria, which we've already seen with the UK pulling out, it would make a $5 dump.
Okay, so what should people be looking at then? Should they be saying just sit on the sidelines, or should they be trying to play this?
Well, what I'm doing right now is I'm looking at particular levels, and if it gets above those levels or below those levels, I'm in the market. So right now what I'm looking at is anything above 108.76, I'm in the market, long, because it seems like it's now going to make that move up. And then on the downside, anything below 105.63, I'm short, and I think the market's going down from there. So that's what I'm looking at. I'm waiting for it to break particular levels. Right now, don't really have any good information, and we're just seeing it range bound. So I don't think it's worth the risk to put on yet.
All right, Alan, we'll certainly be keeping our eyes on it, and this is an interesting point bringing up that people maybe should consider about the reserves and what the president might want to do. For the Street at the Ninebacks, I'm Joe Dell.